The crypto market is continuing its sustained downtrend at the moment, and this is no surprise after a disappointing White House crypto summit and a weakening market outside of crypto. But what is happening, and what should you be doing at the moment? Well, make sure you watch this video, because we are going to be covering everything you need to know. Also, just before we go any further, this channel has a daily giveaway of 1 million Shiba tokens. To enter, all you have to do is be subscribed to this channel, like this video, and comment hashtag Shiba Inu. First off, we need to talk about why the market is crashing. Under President Donald Trump, the US administration has implemented a series of tariffs to address trade imbalances and national security concerns. On March 4th, 2025, 25% tariffs on imports from Mexico and Canada, along with a 20% tariff on Chinese goods, took effect. Following earlier announcements and a brief delay, Mexico vows retaliation to Trump tariffs without detailing targets. These measures have been part of a broader strategy to renegotiate trade deals, particularly with its North American neighbors and China, escalating tensions that have rippled through global markets. Mexico, in response, has signaled its intention to impose retaliatory tariffs, with President Claudia Sheinbaum stating that details would be announced on March 9th, 2025. This announcement coincides with the observed crypto market crash, suggesting a link to heightened economic uncertainty. Canada and China have also announced retaliatory measures, further amplifying global trade war fears. Cryptocurrencies, often perceived as risk assets, have shown a correlation with traditional equity markets, particularly during periods of economic uncertainty. Recent analyses indicate that Bitcoin, for instance, has a correlation of about 40% with the Nasdaq, which has been volatile due to tariff-related news. The crypto market's sensitivity to macroeconomic trends is evident, with short-term drops in Bitcoin prices linked to expectations of slower economic growth and higher inflation, both potential outcomes of tariff escalations. This reaction aligns with expert opinions, such as those from James Butterfill, who noted that tariffs could temporarily depress Bitcoin prices due to reduced demand for risk assets. While the primary driver appears to be trade tensions, other factors could contribute, such as the aftermath of the White House crypto summit on March 7th, where President Trump discussed a strategic Bitcoin reserve. Some investors might have been disappointed by the lack of concrete support, leading to a sell-off, though this is secondary to the tariff impact. We also can't ignore the worsening global geopolitical circumstances, with no end in sight with the Russia and Ukraine situation. So that's why the crash is happening? But what other news has recently come out about the crypto markets? Bitcoin reserve backlash signals unrealistic industry expectations. The widespread disappointment surrounding the US strategic Bitcoin reserve, hailed as a historic step for Bitcoin adoption, suggests unrealistic investor expectations, according to regulatory experts. President Donald Trump signed an executive order on March 7th that will utilize Bitcoin seized in government criminal cases rather than purchasing the asset directly from the market. The announcement triggered a more than 6% drop in Bitcoin's price. The reaction signals unrealistic industry expectations, according to Anastasia Plotnikova, co-founder and CEO of Fidium, a regulatory and blockchain infrastructure firm focused on institutions. It was very clear that the US government could utilize the existing BTC in their possession, aka seized funds, she told Cointelegraph, adding, "It is bizarre to see such a big public disappointment coming from some industry players." Not that long ago, even the idea of BTC reserve held and supported by a federal government was a revolutionary idea, and now we see a very solid implementation. The Bitcoin reserve is a cautious approach with taxpayer funds, which make this decision well aligned with the messaging from this administration, added the regulatory expert. Although the current plan does not involve government Bitcoin purchases, the order does not rule them out in the future. The order authorizes the US Treasury and Commerce secretaries to develop budget-neutral strategies to buy more Bitcoin for the reserve, provided there are no additional costs to taxpayers. Still, the short-term investor disappointment paired with ongoing macroeconomic concerns related to import tariffs may push Bitcoin below 75,000. Spain's biggest bank, BBVA, gains regulatory approval to offer Bitcoin and Ethereum trading. BBVA Spain has received approval from the country's securities regulator to launch Bitcoin and Ethereum trading services. This marks a significant milestone in the bank's expansion into the digital asset space. BBVA customers will soon be able to buy, sell, and manage Bitcoin and Ethereum directly through the bank's mobile app, leveraging in-house custody solutions. Access to the service will initially be limited to a select group of users, with a broader rollout planned for all private customers across Spain in the coming months. One of the standout features of BBVA's new service is its reliance on the bank's in-house cryptographic key custody platform. Unlike many competitors that depend on third-party custody providers, BBVA will secure customer crypto holdings internally. This approach is designed to offer a secure and user-friendly experience for their Bitcoin and Ethereum trading, though it will not include advisory services. Customers will have full control over their crypto investments and be responsible for trading independently. Gonzalo Rodriguez, head of retail banking at BBVA Spain, highlighted the bank's commitment to simplifying crypto investing by offering a fully digital and easy-to-use service accessible via mobile phones. He emphasized that BBVA aims to guide customers in their exploration of digital assets while ensuring their investments are backed by the solvency and security of a well-established bank, tapping into Spain's growing crypto market. BBVA's venture into crypto services in Spain follows the success of its similar offerings in Switzerland and Turkey. The Spanish cryptocurrency market has seen substantial growth, with nearly 9% of Spaniards now owning digital assets, according to a recent European Central Bank survey. This figure has more than doubled since 2022, placing Spain on par with countries like France and Croatia in terms of crypto adoption within the Eurozone. The survey also revealed that a majority of Spanish investors view crypto as a financial opportunity, with many treating it as an investment, while others use it for payments or both. With regulatory clarity and increasing mainstream acceptance, projections suggest that crypto adoption in Spain could reach over 15 million users by the end of 2025. In other news, U.S. banks can now legally handle crypto and stablecoins, says OCC. U.S. banks are now free to engage in certain crypto activities, including the custody of digital assets for customers, stablecoin payments, or running blockchain nodes. The clarification came from the OCC, the Office of the Comptroller of Currency, an agency mandated to oversee sound and safe operations of banks and savings associations. Rodney E. Wood, an exec at OCC, stated, "Today's action will reduce the burden on banks to engage in crypto-related activities and ensure that these bank activities are treated consistently by the OCC, regardless of the underlying technology." The agency also rescinded prior guidelines that singled crypto as a liquidity risk for the banking system. Market reactions. Reacting to the update, Jeremy Allaire, founder of Circle, said, "Banks using USDC, coming soon to a blockchain near you. We are excited about wiring up the existing financial system to the new internet financial system." The previously coordinated banking restriction, known as Operation Chokepoint 2.0, drove crypto debanking and blocked banks from participating in the sector. Interestingly, the update is consistent with the pro-crypto shift under the new Trump administration. Apart from the OCC, a similar pro-crypto position has been seen at the SEC and the FDIC lately. In fact, Alexander Grieve, head of government affairs at Paradigm, echoed the same sentiment. He stated, "OCC rescinds previous guidance that prevented banks from engaging in any crypto activity. Goodbye, Operation Chokepoint 2.0. For his part, market watcher Marty Party noted that the guidance would allow top chains to move trillions of dollars in stablecoins for banks. He claimed this could dent Ripple's control on banking ledger rails. This also dents Ripple's XRP effort to monopolize the banking ledger rails. Win-win. Huge news. That said, the move reinforces the increasing adoption of blockchain and stablecoins in traditional financial systems. Some top banks like JP Morgan, Goldman Sachs, and BNY Mellon are eyeing crypto offerings, including custody for US spot Bitcoin ETFs, a direct competition to Coinbase. Despite the weakening markets, it seems that there is a fair amount of bullish news coming out about cryptocurrency. We will see how things go over the coming days and weeks. I gave my Bitcoin plan out in my free Telegram group, linked in the description. Now, just because the market is down doesn't mean you shouldn't be research and looking for tokens to buy up when the market is down. So if you want to know some of the best crypto to buy, now then check out the video on screen now.